when it's really easy to find properties, it's really hard to sell them. And when it's really hard to find properties, it's really easy to sell them. Welcome, income hackers. This is your host, Ryan G. Wright. This podcast is for individuals and families who are interested in fast-tracking their financial success. You'll hear experts discussing topics like generating a residual cash flow, building wealth through real estate, financial literacy, creating a family legacy, and overcoming your fears. If you get value out of this podcast, please subscribe, rate, and review the podcast. It's a big help to me. Okay, give me a zip code that you've been investing in. We'll just put a zip code in here.
Okay, 07203.
Okay, and I haven't done this, you know what I mean? I'm just pulling this up so you can see it with me.
Fine.
So this is 07203. What you would do is you'd come in here to analytics and you would come in here to value. And this will give you an estimated value. And this shows you the lighter blue is 100,000 and the darker it gets goes up to 1 million. So I'm just going to scroll out a little bit because this is going to show you areas you can invest in and can't. So if you look here, all of this yellow, that's all going to be like $500,000, a few $1 million sprinkled in here. If you look at this green areas down in here, that's going to be closer to like 300,000 bucks. So this area you could obviously invest in. This area here you could definitely invest in. That's probably going to be closer to the 200,000. And then over here you can see some areas, and I can just kind of scroll out here. You know, we don't want to get into New York because obviously you'll see values come up.
Yeah.
So you can see there's an area here you could invest in. There's an area here you could invest in. There's an area over here, and then you can zoom back down in. But that's kind of the first thing is you've got to say, okay, what areas? If you're limited by geography, you have to and price because you don't want to be in the $1 million houses. Then you've got to say, okay, where can I do that? So you come here, do the analytics. There's a big pocket here. There's a big pocket here. There's a big pocket here. There's another pocket here. Another one over here and here. And then you can scroll down. And then these are areas that you need to go work. See this area, this area, this area, all these places. That's a whole city.
So I'm looking in, like for instance, the area code I just gave you. Even when I look, the value is still higher than what I can afford. And not only that, like the areas that I could is considered high risk because of the violence, right?
Well, let's look at that individually. So like this is around the zip code you were just saying.
Yes.
So yeah, all of this area you could invest in because look, the highest priced property in here is in the there's higher properties, but most of the stuff in there is in the 300,000 range. So you could do all of this, you could do all of this. So the problem is you're going after MLS properties. That's the next problem we need to talk about. But the first thing we need to say is, where can you invest? Because I want you to see there are 100 different areas you can invest in. You can invest here, 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 here. These are all different cities. You can invest here, here. There's tons of different areas that you can invest in. Then but if you just go on the MLS, sure, you might find the most expensive properties. But if you're looking, you need to determine these areas and determine where these areas are because those are the properties you need to go after. That's step one is determining the areas you should be going after. And there's hundreds of areas that you could go after, like even this little area here, North Plainfield, you can see all the colors. And when you zoom in, each one of these dots.
North Plainfield and Plainfield.
Perfect.
But the prices have went up.
Yeah, this is active. This is as of recent data. So every time there's a sold, every time there's an active, it all goes in there. So if you look, you can see most of the stuff in there is around 150 to 200. Some of it may push into the threes, but you can see right here, each one of these, like if you zoom in, see each one of these is a house. I can click on it and I can tell you, what everything in here is worth. Let's just zoom in a little bit. So we have data points on each one of these properties so you can see what they're worth. We just type the address in and we can see it. So we know what the values are. So we want to, first off, we have to determine what areas we can actually invest in. And this helps us determine what areas we can invest in. Now, then if you just say, we're going to invest in this area, but you just go off the MLS, you're going to be wasting your time because that's the next big problem is it's a supply and demand. When it's really easy to find properties, it's really hard to sell them. And when it's really hard to find properties, it's really easy to sell them. So right now, it's hard to find good deals, which makes it really easy to sell them. But you're going to have a problem on either way. If the market softened, you're going to find them easy, but you're going to have a hard time selling them. So you have to be able to adjust to both scenarios. And so
Okay.
right now, making offers on the MLS in most areas that we do business is the worst way to find properties.
Okay.
So what I want to do is the math tells you, right? We know what's going on here. We don't have to guess. You know, you want to look at the price growth over the last year. Let's see what that looks like. So that tells a different story a little bit about what's happening with price growth. You want to see where you want to see estimated values. Here you go. This is estimated value. So then you can see where those neighborhoods are. If you want to look at value per square foot, this will give you value per square foot, basically what you're paying per square foot for the property. So you can know all these things so you're not guessing on it. So
Okay.
that's kind of the first thing. The next thing is if you're making offers on properties, I had a really experienced real estate investor on our show, and he told me it was like 1 out of 200 or 300 deals that they've actually closed came from a real estate agent. I think if you're working off-market properties, you probably need to make about 20 to 30 offers if you're getting started. I think you're making offers with a real estate agent in your area. I think it's going to be more than this, but I think you're probably looking 50 to 100.
My question to you about the auctions, right? Because I never really understood. Am I able to bid on the properties that's under auction with you guys?
You can, but our company's not going to be able to fund them for you. The problem with the auction is you don't get
Okay.
title insurance. You lots of times can't get inside the property. So we need
Oh,
access and title insurance. If we can get access and
yeah.
title insurance, we're happy to do it. But what we're talking about here, these are pre-foreclosure. There's 154 homes that are in pre-foreclosure that are all under that $350,000 mark that we just talked about. See,
Yeah.
estimated value is done by the computer, so that doesn't mean it's 100% right, but it gives you an idea. 299, 261, 106, 197, 263, all within that zip code you were just talking about, because we put a filter on here. So each one of these properties, you could go door knock, you could send a postcard, you could do voice broadcast, and you can also make sure that they have enough equity in them. Because the next thing we can filter out is say, hey, we want to make sure estimated equity, we want to make sure there's at least, I don't know, $50,000 worth of equity. Okay, let's close that up and search and see what we can come up with that. So every single one of those pre-foreclosures has $50,000 worth of equity. So, and then you can come look at
Okay.
each one of the properties individually. And then you can select these and create a list. And what happens is anytime a new property comes on the market, anytime a new property has enough equity, not that it comes on the market, it could come on the market, it'll notify you, it'll send you an email, and then you can go knock on that door too, or send a postcard or whatever the case is. So there's lots of resources here. But the way I'm seeing this, there's 154 houses that are under $300,000 or $350,000 that have more than $50,000 of equity. You need to go meet
Okay.
these people.
Oh, and no commercial properties, right?
No,
Like
you
that.
can have commercial properties. You're just going to have some deductions. We'll go
Okay.
over this in the training. I mean, I bought a house that was a couple, three houses down from Burger King, right? I got it. This was early on in my career. I got a really good deal on it, and I'm like, it's a couple houses down. Nobody's really going to care. Well, I ended up breaking even or losing money on the deal because I underestimated how much people didn't want to be 3 doors down from Burger King,
Burger
because they
King.
start cooking those Whoppers at like 7 a.m. and they sit there in those nasty wrappers all day until noon comes around. And so you smell it all day and people don't like that. And then at night, when you want to be outside, on your front porch, you have the glow of the Burger King neon sign there. And
Yeah.
so I was using comps around the corner, but they were a block away. And I did a discount. I'm like, well, people for 10 grand less, somebody would live next to Burger King. Well, no, it was like 50 grand less when people live next to Burger King. And it's kind of the same thing. Like when you grew up, you didn't say, I want to live next to an apartment complex or I want to live next to a commercial property. Now, will someone buy it? Yes. But at what price will they buy it? That's a huge risk to you. Now, there are urban areas, and you're going to deal with some of those in New Jersey where that's really, really common. Well, if that's the case, if all your comps have commercial properties by them, every one of them, your actives and your solds, and your house has commercial property, then there's not going to be a deduction because that's already taken into consideration. But if
Okay.
your house is next to commercial and nothing else has commercial, that's a concern. There's definitely going to be a deduction, and you're taking on more risk because you don't really know what it's going to sell for. The other ones, you have a really good idea because you have multiple comps, but yours is buy an apartment complex, or yours is buy a commercial building. That's going to have an impact. So it's just a risk versus reward, and you're trying to decide where the risk lies. Does that make sense?
Yes, it makes a lot of sense.
Good. Those things for the zero down investing, wholesaling's a great avenue, and you may want to wholesale some of these properties. So you could use all these strategies we talked about, and you have a few exit strategies. One, you could just wholesale it, get it under contract, sell it to somebody else, and you could use this cash buyers. This 471. This tells you who bought the property. This tells you homes that were paid for by cash, and you can do a simple skip trace on them, and then you could contact those people and say, hey, you just bought a house in this zip code for cash. Would you want to buy my house? And then you could wholesale that way. So that's a great exit strategy. The other exit, does that make sense?
Yes, it makes a lot of sense.
Then the other exit strategy you have is you can fix the property up and resell it, right? So get the loan, get the rehab money, go resell the property. Now, there are going to be deals that you could wholesale that you can't get all the financing you want to. Where it's like, hey, we can get you almost all the money, but you could come up with $10,000 or $15,000. And you say, you know what? I don't have that money, or I don't want to come up with that money. I'll wholesale this deal. So you could wholesale it and make that happen. And in lots of cases, we'll actually even find the buyer for you. If you don't want to go to the effort to find the buyer, we'll find the buyer and do a profit split with you. Or you can go find the buyer. That's great. Or what can happen is you can say, I want to do the rehab. You may not have the money. And then there's other alternative ways to come up with the money, like using a line of credit, or getting a business partner and giving them debt, or giving them equity so they bring the cash, the difference, or getting a partner with a pro, or those types of things. Okay. And then from there, the other exit strategy, which is really interesting depending upon your credit, is you can do what's a BRRRR strategy. So you can buy it, you can renovate it, you can rent it, and then refinance it. So if you're looking for cash flow, you can find one of these deals, and then you can renovate it, rent it, then do a refinance with a traditional bank, Wells Fargo, Bank of America, and keep the property as a rental property and get some cash flow. So you have lots of different strategies, but really it starts with what area should you be investing in, the right ways to find properties, how to value those properties, and then you can get into the investment strategies that you want to use. If you got value out of our discussion today, please subscribe, rate, and review the podcast. It's a big help to me. Also, please share with a friend. Nothing is more valuable than creating financial friends who are like-minded. You can do that by inviting them to listen to the Income Hacker podcast. Bye for now, and make it a very profitable day.